Hello traders and welcome to Swing Trading the S&P 500. As a reminder, trading does carry significant risk and all information in this video is provided for educational purposes only. It is not offer or recommendation to trade futures, stocks, options, or Forex. Now let's go ahead and transition to the charts here. And when trading the S&P 500, you may be first drawn to the ES contract, for instance, the futures contract to go ahead and trade from. And that can certainly be fine, but another thing to go ahead and consider is actually considering the micro contract, the MES contract. What this contract will actually do is reduce the amount that you need to go ahead and hold in margin overnight. So it's up to you. You can either trade through the ES or the MES. Since the MES contract only goes back to May 5th, I believe, or May 3rd, then you may want to do your profiling on a higher time frame or diagramming the market actually from another contract, so the ES. So for instance, you would go ahead and do all your market analysis on the ES, and then you go ahead and execute here on the MES contract. The volumes are still the same, but as you can see, you have more data to go ahead and work from, at least from historical levels. Now, since we are at all-time highs here in the ES, you can actually do market profiling from the MES until we start getting back into the 2940 or 2920 areas. If we come back into this area, then you'll want to go ahead and rely on some more historical data to find some key points here in the market. But again, on the MES contract, you're still trading the S&P 500, but you're doing so with less margin being held in your account. You can use those micro contracts and have a little bit more flexibility in the amount of contracts that you actually trade. And again, the only reason we're going to go ahead and actually profile here on the MES is because we're at all-time highs here. And as you can see, we have all the data that we really need short-term to go ahead and identify key swing points here in the market. Now let's go ahead and start right around price here. Now, for swing trading, you can certainly start on a weekly chart here if you like. But again, we have most of the data that we have here that we need here on a daily chart. So what I'm going to go ahead and do now is start plotting levels here on a weekly time frame and just diagram the market. So I'm going to take what we learned here and I'm going to go ahead and apply it to the market. Again, looking just closely right around price, you can see I got the high and the low through here. Now I'm sure there's levels within here, but I'm going to go ahead and wait to go ahead and diagram that. And we're going to do the same thing for the SPY ETF here as well. Now coming down here, you can see we have a key level here. We have a couple highs, as you can see here. All right, we have some highs through there. Even caught a high there, even though it's off by about a tick, you can still count that as a high. Same thing here. A few touches through here. You can see it came above that and retested as support. Let's go ahead and move forward here a little bit. You have an area right through here. Now let's go ahead and see if we can fine tune this a little bit. We have, let's see, right through here. You see that close right there on those highs. Okay, a couple highs respected through there, so we'll go ahead and use this level here. Now, at this point here, you can certainly look to go ahead and draw a trend line. So for instance, we can go ahead and draw this area right through here. Now, for me, this trend line is a bit steep, but nonetheless, it is there. You can see even if we drew it on this low here, let's go ahead and redo that. On this low there, you can see it kind of intersected that, but as soon as it kind of went past it, then moved back up, you'll just want to go ahead and readjust it to that next low right through there. So you must, with trend lines, you will have to readjust it from time to time, especially if it trades through. It does respect it, but kind of traded through it, so you want to go ahead and clean up that trend line. Again, ideally, a healthy trend line would be something like that. So this one's a little bit steep here, but nonetheless, we'll go ahead and use it. Now, as far as any Fibonacci levels, let's go ahead and go from the low to the high here. All right, we have a 50%. That's kind of close to this level here, and a 61.8. But let's go ahead and actually diagram on a lower time frame because we actually might have some levels in here and here to go ahead and take advantage of. So we're going to go down to a 240 minute. And as a matter of fact, let's go down to a 60 minute. And we're going to go ahead and scrunch up the chart so we can see these levels a little bit better. All right, so we do have some levels to contend with on a lower time frame. You can see a high and a respected there, came back, retested as support there. So that's a level I'm certainly going to go ahead and want to watch. So I'm going to go ahead and highlight that level, but I'm going to go ahead and change the color here. And we're going to go ahead and change it to, let's go ahead and change it to a pink color here. All right, so I know this is my daily level. This is an hourly level. And if you want to use a 240, that's perfectly fine here. You can do that. But I'm going to go ahead and make sure that on any time frame that I know that one is an hourly level and one is a daily level. Obviously, this level is going to be more important to me than this pink level. I'm going to come down here. I see that we have a couple highs and lows through here as well. Then you have another high through there. So we're going to go ahead and respect this one here as well and go ahead and mark that off. You do have some lows through here that I actually see. And I'm going to go ahead and actually highlight that as well. Again, you can see some lows and some highs through there. Let's go ahead and see. I'm going to go ahead and mark maybe a level or two down here. Again, this daily level is a little bit close by. Let's go ahead and highlight this one here, see what kind of respect this one had. So let's go ahead and delete that. I'm going to go ahead and copy and paste. All right, again, I'm going to go ahead and go back here and see if this level has been hit before. It does not look like it has. It's from way back. Let's go ahead and zoom in here real quick and just identify why we've picked this level. It's in between the daily and the two daily levels that we see here. But as you can see, we had it come up here and it respected a high. Did respect a low there, and again a high before it broke through. Adjust that down just a touch, and that's a pretty good level here on the hourly time frame. So let's go and go back out to the daily now. All right, so we have a couple levels plotted here. Again, a couple hourly levels, a couple key daily levels here as well. Let's see, that one is right on top of a daily. Let's go ahead and go down here. Okay, so that actually was not intersecting. That is just a daily level. All right, I was simply looking at this level here, but you can see on the hourly, you can identify it. On the daily, you can also see it as well. So that's actually a pretty powerful level to go ahead and identify. We're going to go ahead and do some Fibonacci work here. Again, let's go ahead and draw from the high to the low. Oh, sorry about that. Now we do have an intersection here of the 38.2 with an hourly level. So we do have some confluence between the 38.2 and this hourly level here. So that's going to be something to certainly go ahead and watch. Now for these confluence levels here, I want to go ahead and highlight that here. So what that's going to go ahead and do now, this is region highlight Y right here, just on the toolbar here on the left. Same thing. Again, I'm just going to highlight these levels here, this zone. So if we have confluence between actually three things, if we do have confluence, right now it's just two. We have a Fibonacci and we also have an hourly level. But if we come back down here, we also get price action. That'll be three reasons to go ahead and get long here. There's really no other Fibonacci level there. Now we do have a key swing low here, and this is going to be kind of a micro Fibonacci, but we'll go ahead and identify it nonetheless. We do have some confluence with a 61.8 here of the leg up and this key hourly level here. So we'll go ahead and highlight this level right here as another key level to go ahead and watch. Now we have now this daily level to watch. We have these hourly levels to watch here as well. But again, for swing trading, you're looking for any type of confluence here. We do have a pullback on a daily chart, and we have a confluence, potential confluence if it comes right back down here with a trend line, a Fibonacci 61.8, and a key hourly level that you can actually see here on the daily. So we'll be waiting for a pullback here for a possible swing trade to go ahead and get long here in the MES.